Hello everyone, welcome back to the channel. Today we are going to talk about something that sounds a little boring at first. But trust me, if you understand it properly, it can change the way you think about this topic. Today we are talking about bonds and government securities. That government security is also known as GSECs. Now, most people start investing in stocks, mutual funds, maybe even gold or real estate. But when you ask them about bonds, they either have no idea or they think bonds are only for rich people, banks, or experts. But the truth is, you and I can invest in bonds digitally with as little as 1000 rupees. So, in this video, I will explain this topic in very easy language. First is, what are bonds? Let's start with the basics of bonds. Imagine you have a friend who wants to start a small business, maybe a bakery. He needs 1 lakh, but he doesn't want to take a bank loan. So he comes to you and says, "Can you give me 10,000 rupees? I will pay you back in 3 years, and every year I will give you 1,000 to pay as interest. You agree?" So now you are the lender, your friend is the borrower, then and the agreement is basically a bond. So in simple words, a bond is nothing but a loan that you give to someone. That the someone can be a company or the government. In return, they promise you to things like regular interest payments or full repayment of your money after a fixed time. This is called maturity. What is the key difference from stocks? For when you buy stocks, you become an owner of the company, but when you buy bonds, you become the lender to the company or government. Why do bonds exist? Now you might ask, why would companies or governments issue bonds? Why not just go to the bank for a loan? Good question. That is a good question. For companies, bonds are a way to raise large amounts of money at lower cost than bank loans. For the government, bonds are a way to fund development, buildings, highways. Are a way to fund development, things like buildings, highways, airports, etc., or even paying existing debts. Think of it like this: just as we borrow money from a bank when you need it, governments borrow money from the public when they need it. Uh, what are government securities? Now, when the government of any country, for example, government of India needs money, it issues these securities. By buying them, you are directly lending money to the government. The big advantage: the chance of the Indian government not paying you back is almost zero. Why? Because the government can collect taxes, print currency. That's why the government securities are called a risk-free investment in India. So, in short, government security is the safest bond in the country, backed by the government itself. How do bonds or and government securities work? Let's make this super simple with an example. Suppose you have a 10-year government bond of rupees 1000 with 7% year. This means every year you get 70 rupees as interest. After 10 years, you get back your 1000 original back. So in total, you earn 70 into 10 years, that is 700 in interest plus 1000 principal back. That's 1700 total from a safe investment. Important terms in this is the amount to lend usually is 100 or 1000 per bond. Coupon rate is the fixed interest rate the bond pays. Maturity is the time period after which your money is returned. Yield is the actual return you get, which can change if you buy or sell bonds in the market. Yes, bonds can be traded before maturity. If interest rates in the economy go up, bond prices usually go down, and if interest rates fall, bond prices go up. So apart from interest income, you can also make or lose money by trading bonds. What are the types of bonds and government securities? Types of bonds: first is corporate bonds. It can be issued by companies like Tata, Infosys, etc. Second is municipal bonds issued by cities for local projects. Third is tax-free bonds. Interest you can earn is tax-free. First is convertible bonds. Can be converted converted it into company shares. Types of government securities. First is treasury bills. It is short term for 91 days, 182 days, or 364 days. They don't pay interest. Instead, they are sold at a discount. For example, buy for buy treasury bill for 980 rupees, get 1000 at maturity. That's 20 rupees is your profit. Second is dated securities. It is a long term, 5 years to 40 years. Uh, its term, and it has a fixed coupon interest paid every 6 months. Third is sovereign gold funds. Instead of buying physical gold, you buy digital bonds like linked to gold prices. Plus, you get 2.5% annual interest. Double benefit gold price case plus fixed interest. Fourth is state development loan. It is issued by state governments. It is slightly higher interest than central government security, but still very safe. Now, yeah, the question you should be asking is why invest in bonds and government securities? First is safety. Government securities are the safest investment in India. Second is fixed income. You will know exactly how much you will earn. First, third is diversification. Today, uh, stocks can crash, but bonds are stable. Passive income. Fourth is passive income. Regular interest falls feels like side income. Fifth is tax benefits. Some bonds give tax-free interest. How to invest? Now I will explain how to invest uh, digitally in these. I am from India, so I can give examples from my perspective. First is RBI retail direct portal. Open a free account with RBI, buy government security directly from the government. Second is brokers like Zerodha, Grow, or Upstocks. They offer bonds on their apps just like buying stocks. Third is banks. Some banks let you buy bonds directly from their platform. Fourth is mutual funds or ETFs. If you don't want to pick individual bonds, just invest in debt mutual funds or guild funds. They pool money and invest in government securities. Now, in conclusion of the video, I will recap the whole topic I have explained. First is bonds. I will explain bonds. You are the lender, unofficial. Government securities are the safest bonds in India issued by the government. They work by paying your interest regularly and retaining your money at maturity. Types of uh, types of treasury bills include types of uh, government securities include treasury bills, dated security, or SGBs. They give you the safest safety, diversification, and stable returns. And now you can buy them digitally with just a few clicks. If you find this video useful, please like, share, and subscribe for uh, more this type of video. Tell me in the comments. Do you want me to make similar type of videos? And uh, because uh, uh, because I'm studying this type of topics. Thank you for watching and happy investing. Thank you.